Ladies and gentlemen, traders and investors, a very warm welcome to our channel Polo Vega. We've seen the markets trying to recover some of their losses during this week after the announcement of ceasefire on Tuesday of the previous week, followed by the US-Iran meeting at Islamabad, followed by the blockade of Strait of Hormuz by the US Navy, and finally the announcement of the opening of Strait of Hormuz by Iran. This was then followed by the announcement of the continued blockade by President Trump, and then announcement of the closure of the strait by Iran. The good news is that the S&P 500 has had a fantastic run, printing a new all-time high this week. The end result so far has been the fall of Vix from 35.3 on 9th March to 17.3 on Friday 17 March 2026. The fall in Vix, or the fear gauge, reflects the change in market mood from scared and looking for shelter to risk on. In the recent past, we can see the swings on the fear gauge brought about in very short periods of time. We saw it rise from 17.5 on 25th February to 35.3 on 9th March, and then again fall back to 17.3 on 17th March, which shows a change from normal to turbulent to back to normal conditions within 20 days. VIX by definition measures the market's expected volatility over the next 30 days and reflects investors' expectations of the future or of the fluctuation of S&P 500 index in the near term or over the next 30 days based on the prices of options contracts on S&P 500 index as the underlying variable. The more ballistic the price swings in the index, the higher is the level of volatility and vice versa. When markets fall, volatility issues, values, investors fear, and the VIX levels rise. VIX values greater than 30 are considered to reflect high volatility, which could result from high levels of uncertainty, risk, and fear of investors. Values below 20 reflect calm, stable, and stress-free market conditions. Similar to indexes like S&P 500 or NASDAQ, VIX as well can be traded on the market but through derivatives or securities linked to VIX. S&P 500 or NASDAQ, which cannot be directly traded on the market, VIX can also be traded through index-based securities or derivatives like futures, options, exchange-traded products. Since VIX and S&P show an inverse price correlation, as VIX rises when S&P falls and vice versa, one can include VIX-based securities for portfolio diversification. Having spoken about VIX in detail, we shall speak about beta correlation in our next video presentation, so as to allow ourselves to tweak our portfolios more often than not in the current geopolitical situation where volatility expectations tend to change in a week to 15 days. What we've seen since the commencement of US-Iran-Israel war, the investors are trying to juggle between USD and the precious metals like gold and silver with the fluctuating oil prices and VIX. Gold in fact seems to have temporarily lost its luster with the investors, as it hasn't shown as much of rise or fall as the currencies or oil with a change in VIX. The disproportionate change in energy prices and VIX could be a consequence of the over/underestimation of available energy supplies in the near future. On today's video, we shall see the look of DXY, GBP USD, US oil spot, gold, silver, the S&P 500, and NASDAQ. Disclaimer/disclosure. The contents of the presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 30th of a series of interactive videos aimed at educating our viewers, and we would like to warn all our viewers of the risk associated with the business of trading and investment. Securities investment and trading is a highly risky business, and there exists the possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on analysis of the market, and we do not advise, recommend, guide anyone to take any trade based on the contents of this video, and we do not take any responsibility for partial/total losses arising out of trades based on the contents of this video. Ladies and gentlemen, traders and investors, the chart that we see in front of us is that of DXY, or the US dollar index, and it is the daily chart. We've been visiting this chart ever since the start of the new year, and we've seen that the particular index has been in a sideways trend bound between 95.45 and 100.4. is not been able to breach either of these two limits in the last 10 to 11 months ever since started going sideways from the month of April 2025. There's also a line which is 97.5, and this particular line has been respected in both the upward as well as the downward journey by the index. Whenever it tends to come here, either it finds resistance while going up or it finds support while coming down. As of now, we see that on Friday it tested this particular area of 97.5, and depending upon how the geopolitical situation turns around or continues to be the same, we'll see if it manages to come down to its lower limit of 95.5 or turns back up to go back to its upper range 100.4. But as we've seen, it's not been able to break out of this particular range, and there is a very strong supply area right above 100.4, which is between 101.07 and 101.9. We need to have this particular supply broken before we see an uptrend, or we need to see a nice close below 95.5 if we want to see a downtrend in progress. Otherwise, the sideways trend continues. Fellow traders and investors, the chart that we see in front of us is that of ES, or the S&P 500 based future, and is the daily chart. We've been visiting this chart for the last couple of weeks, and it has been in a nice uptrend ever since 3rd of March 2026. It managed to reverse all its losses during the last 3 weeks and has now printed a new all-time high, which is at 67189.41. The area that's particularly controlling the uptrend as of now is lying between 6751.95 and 6869.30, and it's a nice ballistic, explosive, exciting candle which is controlling the current uptrend. If at all we would like to get into this uptrend and become a part of this uptrend, then we need to look at a place to join the trend on a lower time frame, which could be the 240 minute chart or on the hourly chart. This area between 7046 and 7085.9 is a nice demand zone where if at all price reverses and retraces back, we can get a chance to get into the trend at an entry point at 7085.9 or above, slightly above this particular line, the proximal line, and a stop loss below the distal line, which is at 7046. We could try to see if there are opportunities on the lower time frame, because there has not been any strong reversal during the last 3 to 4 trading days, and as we can see on the daily time frame, there is a small area which could give us an opportunity, but there is also a chance of getting broken out if there is a strong reversal. This area lies between 7140 and 7122. Fellow traders and investors, the chart that we see in front of us is that of Nasdaq based future, and it is NQ, which is the daily chart, and we've been seeing this chart for the last couple of weeks ever since the start of the new year. This particular asset class has shown a lot of strength in the last 3 weeks, starting on 3rd of March 2026, and it has managed to establish some nice rally-based rallies and confirming an uptrend. However, unlike the S&P 500, it has not managed to print a new all-time high and has stopped or closed exactly at 26819.52, which is the old high. If we wish to get a chance of a long and become a part of the ongoing trend, then we shall try to look at the lower time frames to look for an opportunity for it to reverse into a lower time frame and give us a chance to join the uptrend. And the area that we can look to join is between 26518.93 and 2629.00. Unlike S&P, this is much closer to the price currently traded by the index, and if there is a nice strong reversal, then we could get a chance to enter at 26518 with a stop loss below 26291.00. All the three EMAs are currently showing a very strong uptrend, and the chance of reversal is very low, so we should try also to look at the lower time frames if at all there are any opportunities for us to join at a lower time frame and enter at the soonest, but there is none. As we can see here, there is no strong rally or rally based rally or a drop based rally for us to join the trend. Fellow traders and investors, the chart that we see in front of us is that of GBP USD, or the cable, and we're looking at the daily chart. As we can see that there have been some nice explosive candles printed on Monday and Tuesday, followed by some red candles but not very weak. The reason behind these three candles being red is a direct reaction to the movement of the US dollar, where the index printed some blue candles which are not so strong as a result of the announcements made by the Iranians and the President of the United States of America easing up the situation at the Strait of Hormuz. However, we shall need to see a bit of weakness in the pair to allow us to get into the demand zone at 1.3400. What we can see is that there is no zone on the daily chart, but if we wish to become a part of the ongoing uptrend or the temporary uptrend in this particular pair, then we need the red candle or the drop to come into our zone, which is at the entry of 1.34066, and the stop loss will go below 1.372. The stop loss has to be very tight. Traders and investors, the chart that we see in front of us is the FXAU/USD, which is the gold based ETF, and it is the daily chart. We've been visiting this chart for the last couple of weeks and have seen that it has managed to establish a couple of lower highs since the all-time high that was established in the month of January, and that was at 5600. The lower high then printed was at 5400. After that, there have been highs printed at 5230 and then at 5040. It is as of now trying to get past the last high that was printed between 4900 and 4840. The candle that's been controlling the slowly progressing uptrend is between 4100 and 4500. It has been supporting the stair-stepping candles that have gradually raised the current price to 4835, which was the close on Friday. We can still go on to join the slowly progressing uptrend on the 4-hour chart or on the 1-hour chart, where we can find areas to get into a quick long and take the profit at the immediate opposing supply zone. Say for an example, as of now we can see that the price is coming into this demand zone, which is not very fresh, and it has an explosive move out of this area where the stop loss would go below 4767 and the entry would be at around 4800. Otherwise, to be on the safe side, we could look at getting into a long trade on the 4-hour chart where we can enter at about 4726 with the stop loss going between below 4638 and the target coming at 4850. So that's the trade we have as of now. Fellow traders and investors, the chart that we see in front of us is that of XAG/USD, which is the silver based ETF, and here's the daily chart. Similar to gold, silver as well had a nice uptrend and a very good run in the year 2025 and established its all-time high at 121.73 in the month of January, after which it fell to its low at 63.8 after breaking the supporting low in the area of 70 to 75. It then managed to retrace some of its losses to establish its lower high at about 96.5 and then fell back to its lowest low in the current year, which is at 61.1, and ever since then it's been grinding its way up to reach the current close on Friday, which is at 81.15. The rise has been very gradual, supported by the bullish candle between 60.6 and 68.85. If we wish to join this gradually moving uptrend, then we will need to go to lower time frames to see some nice demand zones where we can try to join the slowly progressing uptrend on a strong reversal into our zone. So the best area that we can see is between 60 and 65 or 66. That is a part of the supporting candle for this uptrend. But the immediate low that we see in front of us is that between 75 and 72.41. So our stop loss shall go below 72.41 and the entry shall happen about 74.5, and we could take the target at about 81.5 on this trade. Fellow traders and investors, the chart that we see in front of us is that of oil spot, and it is the daily chart. The US oil spot has been the most volatile of all assets in the last couple of weeks, and it has seen the highs of 115 before coming back down to 76, and then it has been going sideways with ballistic candles, both red as well as blue, until it managed to print some supply areas in the last 2 weeks. The first supply area that has been printed on the daily chart is between 106 and 101.06. The second one lies between 98 and 90.28, and the third one is a nice based drop which is between 90.28 and 87.65. But because of the expected volatility during the next 1 or 2 weeks until the war has come to an end and until both US and Iran have come to an agreement, it will be wise to take shorts or longs in remote zones or in the distal zones and not in the proximal ones. Like here we have a nice area for a short between 91.45 and 88, but we should avoid taking a short here and instead try to wait for it to reach the level of 100 and with a short going above 106, or otherwise we can look for a long below 75 and a nice stop loss below 72, which is a rally area. But since the announcement of the ceasefire, we can see that it has made a nice base drop on the daily chart and has established clear downtrends on the lower time frames. So it's better to wait for the current price to reverse into our supply zones and go for selected supply zones on the 4-hour or the 1-hour chart. We hope that our presentation has been informative and exciting enough for you to come back and watch all our videos every week. We shall continue with our weekly commentary and analysis. We shall be touching upon events which were the highlights of the week and shall also talk about interesting asset classes each week. If you liked our video, please give us a thumbs up and press the bell icon underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us through our Twitter handle @PoloVega. Please keep saving, keep investing, and keep getting wealthier until we meet next. We thank you for watching our video, and please like, share, and subscribe to our channel Polo Vega.